723. Frank Napolitano with me.
Morning.
Good morning. I know a lot of people who are looking at renewals, who are looking at getting into homes as first-time buyers and have the down payment ready and have been waiting, are probably getting anxious, and you're probably noticing that some increases since June especially.
Been some significant increases. It's not, normally we get the little 10 basis points increases. Middle of June, we had a 5-year mortgage at 289. Today, 349. Significant. 60 basis points on your average $250,000 mortgage works out to approximately $8,000 over 5 years in extra interest.
That's no small scratch, right?
A lot of money.
I guess what I'm wondering is does this create a rush to buy?
Typically, very much so. So we're very busy this summer because we've got people that are pre-approved at that 289 and that expiry is coming up. Disappointing for when customers call me and say their mortgage is up in October, November, that they didn't pick up the phone in June and call us and lock in that rate for 4 months, because we would have been able to hold that rate for 4 months and it would have taken them right to their maturity. So I'm disappointed that customers don't do that. And generally, Canadians, for some reason, wait till the last minute to look after their mortgage.
I think it's so funny. It's the most money that we output, right? But it's something that we don't, like most important things in our lives, maybe it's something that we kind of avoid out of stress. Maybe I'm not sure.
Well, I think it's customers don't like, in Canada, we're not used to negotiating. You know, we go to a store, we pay the price. You go to other countries and you have to negotiate everything, and you barter down and you bring the price down.
Even a couple of 100 miles away to the south of us, they're very used to advocating for themselves as consumers. And one of your major points, and a sticking point for you, is that Canadians do not go into their banks and say, I deserve this, and then fight for that.
I totally agree. And you know, I say to some customers, download our app. Our app will tell you what the best rates out there are. Go into the bank and say, here's the rate that I can get at Mortgage Brokers Ottawa, match it. And if you don't match it, then I'm okay to go somewhere else. Customers, for some reason, have this loyalty to their banks that they're going to renew with them and pay a premium to stay with them. It shouldn't be that way. They should be getting a savings for staying with them. Loyalty deserves to be paid. You shouldn't have to pay for that loyalty. Yeah,
that might even be something where their mind is in this older thinking, where on the consumer side, we're thinking that way, but on the business side, and naturally, in business, you're going to take advantage where you can and make as much money as possible. That is how business works. Let me ask you about locking in. You know, you see these points go up 60 basis points, as you mentioned. Do you want to lock in if you're in a variable?
Boy, tough question, because the prime is not expected to change. So as much as we've seen the fixed rates change, prime is expected to remain the way it is now for another year and a half, maybe 2 years.
When you're on a variable, usually prime plus one or
prime minus, right? So even today you can get, so today all of a sudden we've gone from 95% of our business being fixed mortgages over the last year to now we're down to about 25% of it now, people inquiring about variables, because you can get a variable of prime minus 45. So now you're at 2.55 on a variable versus a fixed of 349. It's a 1% savings.
So it isn't necessarily an indicator when the banks decide to up their rates that they believe prime will eventually come up?
There are two different tables that they look at. So the prime is the Bank of Canada sets the prime rate, and that's not expected to change for a little while, where fixed rates come off the bond markets. And when the bond markets start to go up, which is what we've seen over the last few months, then the fixed rates go up.
Interesting. So,
and then there was a CMHC announcement where they're only giving the banks so much that they can lend out that's on their insurance. So therefore now the cost for the bank to lend out the money is a little bit more. So we'll start to see some increases from that within the next month or so. So I would expect that rates might go up as much as another quarter point in the next 4 weeks.
So we're at a point where, and you know, if you're listening or watching this and thinking to yourself, that's a lot of complicated information, it can be simplified just by saying, just like buying a car or buying anything else that's possibly negotiable, make sure that you're doing a little bit of research on the number you're going after.
Go in with a number. So look at a website, look at a mortgage broker website. The banks will never advertise their lowest rates. Let's make that very clear. They do not advertise their lowest rates. So if you look at the bank website and you see that that's their rate, don't think that that's the lowest rate. That's not the lowest rate. You look at a mortgage broker site, we advertise the lowest rates. Look at the mortgage broker site, find out what that rate is, and go into the bank saying, that's the rate that I want to get. If you can give me that rate, great. If you can't, then I'm going to go elsewhere.
Or skip all that work and just go to the brokers.
The only time that you're going to stay with your bank is if you're up for renewal and your job situation has changed where you're not making as much. Because if you just renew and you made your payments on time, then you can auto-renew without having to qualify again. So that's a situation to do that.
The expert, Frank Napolitano, mortgagebrokersottawa.com. Thank you so much for that as we try and stay informed on what's going on with our mortgages.